At Staples Business Advantage, our team of experts can help you find the breakroom products to satisfy everyone's preferences, while AI can
suggest popular items, monitor stock levels, optimize pricing, and automate reordering.
AI can do a lot of things.
But I can never know the taste of a truly great cup of coffee. Sigh.
But you also can't get hangry.
This is true.
At Staples Business Advantage, we help you select from 2,000 breakroom products, so you can be sure there's something for everyone.
Yum. Sign up today and save 20%.
Staples Business Advantage.
Business is
human.
This is a Shares for Beginners quick tip. Essential lessons. Questions answered.
I interviewed Rudi Filapek-Vandyck this week, and he kindly responded to my arm twisting to give us a few more moments to discuss the violent up and down movements this week on world markets. Apparently it's a lot to do with low volume and short covering. This interview was recorded on October 5th, last Wednesday, and I'm releasing this over the weekend. And that's after the US S&P500 dropped on Friday by about 2.5%. That's late on our Friday night. Anyway, for those of you who believe that too much Rudi is barely enough, here's a little bit more. Rudi has kindly agreed to answer a question without notice.
That's because you're twisting my arm. I can't say no now.
I'll buy you a drink later. It's okay. What's really astonishing is the last couple of days on the share market and in the US markets. I mean, we're talking, because we're recording today, it's the 5th of October, I believe, is it?
Yeah.
5th? Yep, the 5th of October. So both world markets and the Australian market have just had huge, just enormous gains.
Yes.
And I just don't understand it. I mean, I think we're just looking down the barrel of a recession. You know, Vladimir might drop a bomb.
Yeah.
What's your opinion about these moves?
Well, one thing I've learned over doing this for a few decades now is that, and then you're definitely not the only one. I mean, journalists in general, and a lot of other people as well, they have difficulties with integrating market positioning in how they analyze and describe the market. And in particular in the bear market, because I want to make this clear, we are in a bear market in 2022, and in my view, we were always going into a bear market because we had such a massive switch in central bank dynamics that it would always have a severe impact on equities.
It's always been about interest rates, hasn't it?
Exactly. And the best year, while everyone looks at 87 or 2000 or the 1930s or whatever they come up with, my comparison has always been 1994, which was the last year when central bankers all of a sudden moved into tightening. At the time, it was because of political pressure more than anything else, but nevertheless, the result is the same. At the end of that year, all the assets were negative. All the assets had returned a negative return, from gold to properties to bonds to equities.
Is this the recession we had to have?
I don't know exactly when Australia had its recession. Was that 94? Was
92?
Yeah, I think it was a little bit before that. Yeah, so the answer is no. But in 94, the US went on a spree, and all the assets that year had a negative return. And that had always been my framework for this year. It doesn't mean it collapses by 50%, but it also means gold, bonds, equities, properties, it all goes down. And that's basically what we're seeing this year. Now, what you typically see in the bear market also is that volume really shrinks a lot. And on low volume, you can get really crazy moves. And that's being exaggerated by the fact that what people also do in bear markets, they take a lot of short positions. And in particular, the professionals do this, or hedge funds do this. So they want to be either hedged to the downside or they want to profit when share prices fall. The problem with that is that sometimes there is an event that happens. Usually it happens when on a technical basis markets are oversold, and then something happens that reverses the negative sentiment. And what we've seen this week, for example, is the RBA basically gave that trigger.
And it's given a trigger to world markets.
Yes, because now
which is astonishing.
Yes, so now everyone
Australia's not putting up their interest rates, and no one else will.
It's because also there is that human inclination to always hope that share prices will go up tomorrow, and there's a whole class of traders out there They're constantly banking on the fact it'll go up. If not today, it'll go up tomorrow. And if not tomorrow, it goes up the next day. So from the moment when there is an opportunity, and then the shorters have to cover their shorts, and for those people who are not familiar with that, is that if you take a short position, then you're positioned for share prices to fall. But if that doesn't happen, or if it goes up, then you basically start buying shares to cover your short position. So there's a lot
which drives the price.
There's a big momentum all of a sudden that shoots upwards.
There's a great explanation of it. Have you seen the GameStop?
No, I haven't seen it yet.
Netflix?
I haven't seen it yet, but I've no doubt that it's yes.
They explain that very
fully.
So
if you combine the fact that markets are oversold, that there's a class of investors out there that needs to buy shares forcefully so because they have to cover their short positions. Plus, of course, the usual algorithms and day traders. On low volume, that's when you get, and that's why a bear market is apart from the fact that it's terrible to the mindset of investors who see their portfolio eroding over time. It also has these fierce rallies to the upside, and this is the reason why. Right? The irony is that. If only one person buys a stock, it goes up. So on low volume, it just goes up. The share market doesn't need volume. Right? While in the housing market, you only need one buyer. But in the share market, in particular in bear markets, low volume means a few buyers can do a lot.
Set the price,
can do a lot. You need many more sellers to get the share price down, but you only need a few buyers to get it up. And that's what you then see on a daily basis. And this is why trying to navigate a bear market can be quite difficult and very tricky.
So you still remain pessimistic?
I've declared myself a cautious investor this year, and I'm still cautious. Yes, I've actually made remarkably very few changes to my portfolio this year. I've increased very quickly the level of cash in my portfolio. To between 30 and 40%. It's still above 30% now, and I've tried to stick with stocks, with companies that I find are very unlikely to issue a profit warning, even when the economic conditions deteriorate. And true to my own analysis from the past, I have no cyclicals, no commodities. And very few financials.
So issuing a profit warning,
yes,
that's when a company comes out and says, look, we're going to miss targets.
We're not going to make it. Yeah.
And what time of the year does that usually occur? Is that 6 monthly periods when they're reporting in Australia, for example?
The official rule is that you have to notify the stock market immediately if the aberration, if the difference is 15%, I believe, or more. So if it's 14.5, you don't necessarily need to tell the share market.
Mind you, that's pretty bad.
Yes, exactly, exactly. And this is also why sometimes in reporting season they come out and they go like, it's only 9% less or whatever, and the share price absolutely tanks. So what you usually get, because we don't have a quarterly reporting season in Australia, we have a 6 monthly. So it's August and February. And then usually the weeks leading into each, so we get June, July, and January are often the periods when companies come out and go like, you know what?
Yeah.
That forecast we gave last year, probably not going to make it. No?
And that's confession season.
That's confession season, exactly. They have to come up. Because also often they need time to assess the numbers that come in. Very few companies have a day-to-day exact view of what they're doing. Plus, of course, 1 day, 1 month sometimes not always gives you the right picture. We have weaker periods, we have stronger periods. There's often a lot in play. New CEO, old CEO about to go. Sometimes the other thing is that sometimes they keep on hoping that if it's behind the forecast that it catches up. So not surprisingly, they sometimes wait until the last month and then have to come out, and then you see sometimes with 30% behind forecast. You go, how is that even possible? Yeah.
And how could you not tell that?
And that's why sometimes the class actions come in, because then investors go like, well, I'm really pissed off now. I'm losing money, and you knew this before. Huh? And yes, so it's but then again, you don't see that necessarily in share prices, in valuations. That's the uncertainties, and sometimes you're lucky and you pick that up yourself, or sometimes an analyst does, and sometimes on occasion you just don't. I mean, that's why there's risk in investing in the share market.
Well, there you go, listeners. When too much Rudy's never enough, we've given you absolutely more. Thanks very much again, Rudi.
Again, my pleasure.
If you found this podcast helpful, please tell a friend, especially if it's someone who needs to start thinking about investing for their future. You'll be helping them and helping me to keep this show on the road.
Shares for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation.
And thank you for listening to my podcast.
At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
Recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes. Only algorithms.
At Staples Business Advantage, furnishing your office is easy. And with the best warranty in the business, we're committed to you now and down the road.
Sign up today and save 20%.
Staples Business Advantage.
Business is
Human.